Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving right into. It was a stunning reversal on Wall Street Thursday. Dow Industrials are racing a 700-point gain. The Nasdaq sinking 2%. Strong results from Walmart and Nvidia, not enough to shake fears over the Fed. Odds the central bank will cut in December, falling after that September jobs report. We're going to look under the hood at the market trends of the day. Plus, earnings season rolling on here. We've got to look at the companies moving on results after the closing bell rang, including Gap, Ross Stores, and Intuit. And the rush for holiday shopping is kicking into high gear now, but retailers have been feeling the pinch of tariffs for months and have been planning accordingly. What you need to know before buying those gifts. We're heading into the holidays with retailers in a stronger inventory position than last year, but with companies pulling forward because of tariffs. Our next guest says 2026 could get a little more expensive. Joining me now is Lauren Murphy, Wells Fargo Retail Finance Managing Director. Lauren, great to see you. So you've been tracking these inventories, Lauren, and as we head into the holidays, you see a 4% rise in on-hand inventory, but then a sharp drop in inventory coming in. I guess the bottom line, all this for viewers, Lauren, is they're getting ready to do that shopping over the holidays. What do you expect to happen with pricing? I mean, does it generally stay flat, go up, go down? Walk us through it. What would be your forecast?
Yeah, Josh, thanks for having me. So as you mentioned, we did see that pull forward of inventory in the beginning of the year, and I really think that bodes well for prices, right? Retailers did a really good job setting the stage, bringing that inventory in before the price increases. So that's really going to bode well for the consumer. So what we're hearing from retailers is that they're really trying to hold the line on the cost increases to get through holiday, meet their consumer where they're at this holiday. But we do believe that there may be pricing pressures going into 26.
Are there any sectors though, Lauren? I mean, generally, okay, pricing they hold the line. Any sectors or verticals where you might see them rise?
Yeah, I would say most immediately, I think we're seeing it in home, right? Furniture, home goods, et cetera. I think the price increases were just too fast, too rapid, that we've already seen that kind of trickle up in both the inventory levels that we're seeing and also the prices that we're seeing in that sector.
If retailers are generally going to hold pricing steady here, Lauren, what do we think that could mean broadly for margins?
Yeah, I think, right, similar to the results that we're seeing, I think it's going to continue to be a mixed bag. And that's something that I'm going to continue to keep an eye on heading into getting post-holiday results, because I do think the question is going to be the sales trend that we're trying to see through holiday. Is that really going to come at the expense of margin as the cost increases? But also, are retailers really going to need to chase that sale and discount further heading into holiday to capture that consumer?
Black Friday, Cyber Monday coming up, Lauren. I'm just curious, I mean, you track the space. How have those events sort of evolved over time?
Yeah, like I've been in this space for 15 years, and it used to be retailers lived or die by those, that 4-day period. I've now seen it stretched out to we're really tracking what the total sales are across the month, right? We saw sales for the holidays start as early as October. And I do think, although the Black Friday, Cyber Monday are going to continue to be marquee events, right? That's where we're going to see a lot of customer demand. There could potentially even be further demand post those holidays heading into Christmas, because if retailers aren't seeing the sales that they need to this upcoming weekend, right, that's going to bode well for the consumer, and they're going to see deeper discounts heading into Christmas.
Speaking of the consumer, Lauren, any tips and tricks you might offer friends and family as they head into holidays and get ready to do that shopping?
Yeah, listen, shop around. I think retailers are going to be really dynamic in their discounting strategies this year. We're going to see probably maybe broader markdowns, or so a little bit more capping markdowns on what we think are going to be higher selling items. So really, you got to be diligent out there. Also, a good alternative this year could be a gift card, right? If your budget is a certain dollar amount, everyone loves a gift card. It kind of puts the onus on your recipient to go out there, get the best deal they can find in the item that they want.
Final question, as you sort of heard from these retailers, it was Walmart and Lazy Boy and Target. You saw the results, you listened to conference calls. Did it generally sort of align with your views of where the sector's at and where it's headed?
Yeah, I think, what we're hearing is everyone wishes they had a magic ball heading into this holiday. I think we're going to continue to see a mixed bag. I think it's going to be a little bit more of digging into the story, right? We're all bracing for a little bit more of those cost increases to start impacting P&Ls, and something we're going to be watching very closely post-holiday.
Lauren, great to have you on the show. Thank you.
Thank you.
Stick around. Much more Ask for Sure trends still to come. Well, stocks closing lower after an abrupt midday reversal. A blockbuster earnings report from Nvidia, not enough to sustain the earlier rally. Yahoo Finance's Jared Blikre joining us now with the trading day takeaways. Jared.
Thank you, Josh. We got to start with that risk-off reversal, and what a difference a few hours make. I was here for the jobs report this morning. It was kind of a non-event because the market was already flying high. Let me just show you the XLK. This is the tech sector. We opened up with XLK up about 2.5%. Everything was looking good. I was thinking, all right, well, we should be able to sail to record highs now. And that abruptly came to an end around 11 a.m. That's when the selling started. And by the way, that's when Bitcoin broke 90,000 to the downside. We'll circle around to that later. But check out this. XLK, the tech sector, closed at the lows of the day. So very ominous there. And just in general, I was also watching the Nasdaq 100, and we got a rare signal. I explained this just on the close today, but we were, let me get to the intraday. We were up 2%, and then we closed down more than 2%. That is a signal that you typically don't see when the market is only down by a small amount. We're down by like 7-8% here. This is something that we were seeing around these April 8th bottoms right there after the post-Liberation Day sell-off. So this is a rare pattern. I did find one historical analog. Maybe it means nothing, but suffice to say there are some strange things going on in the market right now.
What other markets did you see involved in that sell-off?
I'm glad you asked. So the dollar might be in play, and also the VIX. So let's tackle those one at a time. Here is the US dollar index, and it didn't have a big jump today. This is year to date, and here is where the price action is right now. But we did get to the highest level in about, 3 months or so? And the importance of that is when the dollar jumps higher by a large amount, sometimes that weighs on equities. Like I said, that's not what happened today, but breaking to a relative new high might tell the street, might tell traders and algos that this is the beginning of a larger move to the upside. So there's part of that may be at play here. We'll have to watch the US dollar index. Here's the intraday. I didn't see any big movements, and that's just a whole lot of chop. But suffice to say, if we start trending above 101 there in the Dixie, this so-called US dollar index, that would be a warning sign. Pretty big one, I think, for the market, the way it's situated right now. Here is the VIX. Now, 2642 is elevated. I will show you that in the context of a 3-month chart. So intraday, we actually had a little bit higher spike in the middle of October, and remember that was that China tariff scare that never materialized. But where it is right now, that is trading at the highest level since October. Here's a year-to-date chart. And what stands out here, I think we showed this yesterday too, that was a much higher VIX level that we saw in April. So there weren't, we don't have nearly as many concerns as fears as we did that back then. But as I've been talking about, the VIX has been trending higher. There's just been kind of gently sloping. If you take a look at the 2-month here again, you can see rounding here. The VIX also historically tends to spike in October and November, so the worst might not be behind us. We'll have to see what comes in December, but that's a whole nother can of wax.
What about, you mentioned Bitcoin. You want to circle back on that damage?
Yes, so that is my third point here. We got some crypto carnage, and I was watching the market. I tried to match all the headlines today with the tape, and one of the things I noticed was that about 11 a.m., and we're going to see a different timeline here because this is in UTC intraday, but around 11 a.m. was when Bitcoin crossed 90,000 to the downside, and that's when the selling really started in the stock market. And sometimes these weird correlations, they snowball on each other. And getting back to the VIX for a second, tomorrow is options expiration. So dealers, the way they're positioned right now, it's called negative gamma. When you get a small movement down in an index like the S&P 500, well, that magnifies it because they have to hedge their position by selling more into the market. Very wonky option stuff, but suffice to say, I think there was a confluence of things that really came together today. Call it a perfect storm, if you will. And the good news is we were only down by what, 2% or so. It's not the end of the world, but we could see some more carnage later. I want to get back to crypto because I didn't show our crypto heat map and I didn't show a Bitcoin chart just yet. You can see it's down 3.2% over the last 24 hours. Let me put the year to date up. And so we can see the last time we were at this level was in March. And what I was talking about yesterday, my big levels here, well, one was 90. That's obviously broken to the downside. Next one is about 75, and I would call that 73 to maybe 76,000. If that goes, then we got a whole different deal, a lot bigger sell-off on our hands. So here's that level once again, 75,000. That's a big kind of roundish number, and we do have support there. That's also the prior highs from 2024, or at least early 2024. 75 needs to hold here, and that's still 12,000 away. So we could see more selling into that.
All right, thank you, buddy.
You bet.
Appreciate it. Stick around, much more asking for a trend still to come. Walmart shares were higher today after that strong earnings report and full-year guidance raise. Yahoo Finance executive editor Brian Sozzi and Market Catalyst host Julie Hyman spoke to Walmart CFO John David Rainey right after the report.
If you dissect that a little bit and you look by income cohort, the disparity between the low income cohort and the upper income cohort has grown a little bit in more recent months. It's consistent with the macro data that you all see. Like if you look at October wage growth, the difference between wage growth in the low income and high income cohorts was as large as it's been in almost a decade. We see a little bit of that in our stores. So it's something we're keeping an eye on. But overall, when you take the consumer in total, still feels very consistent. And if you look at our guidance for the fourth quarter, it's pretty much like what we've experienced already this year.
When will prices on food begin to fall? I'm sure you've been tracking the news. The administration is trying to bring down the prices of coffee, in part because coffee prices are higher because of tariffs. Like, when does the household see things get a little cheaper?
Yeah. To start with, I think you need to step back and think about the overall price level of food versus maybe 5 years ago. And food prices are still 25% higher than they were during the COVID time period. In the most recent quarter, like-for-like inflation for us was about 1%. We're actually really encouraged by some of the new announcements from the administration where they're going to take tariffs off some of these items that we're solely dependent upon with sourcing from foreign countries. Things like avocados, bananas. We can't grow those at scale in the United States, and so bringing the tariffs off of those should provide some relief for consumers as we go into the fourth quarter.
And John David, what among those types of items, are there certain ones when you see the price come down that it sort of drives traffic in the store, that you view them as a sort of lost leader that people get excited about? Or, you know, I don't know if eggs are in that category. I don't know if coffee's in that sort of a category, but are those items that you can think of that would fall into that?
Well, let me give you an example. Behind me, we have a 50-inch Vizio TV. We're selling that for $128. And I want to pause here. We saw someone in one of our stores the other day that had 3 of these in his basket, and we asked him about it. And it was priced so low that he thought we had made a mistake and mispriced it and was taking advantage of it to buy 3 of them. But when you see something like that, it's telling you that customers are willing to lean in and buy those higher ticket prices when they find value with them. But how that translates into our financial results, you'll remember we bought Vizio. With Vizio, we control the operating system, and so we have that relationship with the customer far beyond that specific moment of the purchase of a TV. And so the margin on selling a unit of a TV is not that great, but we can monetize advertising by providing that additional channel to them going forward and continuing that relationship with the customer.
I was going to say, I'm sure you can't make a lot of money on a $120 Vizio TV, but it must have other uses. So does that also, not just you getting the revenue from the lifetime of that product, but does that also drive traffic into the store, and then you keep them in with some of these other value propositions that you're offering?
It absolutely does. And what our team has done a really good job of this year is what we call mixing out the basket. And so it's trying to minimize the overall price impact or cost impact on customers by being very selective about where we price maybe higher tariffs, pass those on to customers versus where we might absorb some of that cost impact. And so again, if you look to the most recent quarter, inflation was only up 1%. And so it shows you that the team has done a good job of mixing out the basket to minimize the impact on the consumer.
John David, early in the week, I caught up with the Target team, and I thought they were going to boot me off their media call when I asked them this. I asked them point blank, are prices just going to stay high for general merchandise for as long as tariffs are in place? Now, they tap danced around it. I mean, that's what Target does. I'll put the same question to you. As long as these tariffs are still in place, do consumers just need to be accepting that prices for things that maybe were cheaper a couple years ago they're just going to be higher? You have to deal with it.
We're wired for everyday low prices. So, we want to find every opportunity to try to bring down prices for customers. I'll give you an example. It's not general merchandise, but a basket of items for a Thanksgiving meal, we can price for 10 people at $40. That's less than it was a year ago. And so we're always looking for these areas where we can try to bring prices down. And as the example with the TV, when you have these really attractive price points, it will drive store traffic. It will create a reason for people to come into the stores, and they don't just buy the TV, they buy other items as well. And so we're working really hard on behalf of our members and customers to bring those prices down. But tariffs have been something that we've had to absorb some of. It's been something that has caused higher cost of goods sold for us year over year, but we're working hard to bring the prices down.
Gap shares seeing a pop after reporting third quarter results. The retailer's comparable sales topping Wall Street's expectations. The company also lifting its full-year operating margin outlook, as well as increasing its full-year net sales outlook to the high end of its prior guidance range. CEO Richard Dickson noting that the company's positioned well for the holiday selling season. Another retailer name getting a bounce, Ross Stores, the company reporting an earnings beat for the third quarter, and comparable sales also did top estimates. Looking ahead, the company raising its full-year earnings outlook and also topped expectations. Ross Stores highlighting it's optimistic for the holiday season and now expects tariff-related costs to be negligible in the fourth quarter. Shares of Intuit also jumping after reporting earnings. The software company posting better than expected results for its fiscal first quarter. Guidance for the second quarter came in just shy of Wall Street's expectations. Be sure to tune in to Market Catalyst. Intuit's CFO will be joining Julie Hyman. That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.